Test, test. Okay, this is a market review. Today is February 2nd, 2026. It's the first trading day of February. Let me just confirm that we are recording. Okay, yes, I believe we are live. Okay, so we're looking at a daily chart for the E-mini S&P March 2026 contract. Excuse me. Okay, so looking at the daily chart, we are in a nice consolidation period right now, but just some things that we want to note. Last week we had a all-time high taken out here. And we're also going to make mention of we had this current weekly opening gap, which I will mark in red. On a daily time frame. You can see that our Friday, we had this, make mention of this, weekly low was taken out on a Monday. So both Friday's high and low were taken out. But we kind of want to see really break down how everything reacted out here. So one thing I want to make mention of is this initial start of that buy model, starting from January 26th on a 4-hour chart. This was tapped into. I'm referencing this. Just from experience, I've seen that this phenomenon occurs a lot. You can see that. So overnight we had a large run up on a 4-hour. This is an imbalance that we tapped into the high of and immediately reverted back into the range. Let's also take a look at the new day or regular trading hours. So here's our 9:30 opening price. Mark that out in green. This is our regular trading hours high. Put that in a nice maroon color. So no, that's incorrect. See a previous day high. We will mark our daily high as this blue regular trading hours in the maroon style. And just a liquidity level in black. So let's see what actually happened today. So we had this new week opening gap that formed. Let me tighten this up a little bit right here. And so our 9:30 open occurred inside of that gap. There's a 5-minute imbalance. So we actually break down even further. The main thing I wanted to point out is just this blue area. So we have these drawn out here. If we actually look at our 9:30 open, we can see we were only up. But let's dig into this 1-minute action. Here's another layout that I was using, where I show both the old new day and new week opening gaps. New weeks in purple, new days in blue. So we have these regular trading hours shown. As here, so straight up from the 9:30, we have these areas marked out. That was an accident. So let's just take a walk through every macro and kind of see where our entries and exits could have formed. Get rid of that. So here's our 3 a.m. time, our London session kill zone. So by the time this macro ends, you can see kind of we are pushing higher into this new week opening gap. So let's see from this area, this new week opening gap is from January 25th. So immediately we deliver to that by 305. At that time, you don't want to push in on a short if we're just tapping into that new week opening gap. So the initial bias at that time would be long. So given that information, what are we looking for? We're looking for those imbalances that are formed within that macro time. So we have our 3 a.m. first presentation, and then also this formation right here. Where's our risk and profit? We have this new day opening gap from the 21st of January. So our entry would be right on the high of this first presentation, targeting the new day opening gap. Very low risk trade. 4.82 RR. Sort of how you would manage this. I would, even when we get to this point, I wouldn't be inclined to move my stop up, but given the 5 handles, we would have been able to take off there. And then what do we look for? Give us discount of the price range into this imbalance, 50% level, and delivery into that new day opening gap. So for my documentation purposes, I'm going to take a quick snippet of this. Let me get this.
The market is open.
Moving on, 350 to 410. So we can see a break lower, but by the time the macro is over, we have pushed away from our closest array, which would be this new day opening gap. So how did this tip its hand to us? We saw a break lower. You see SMT here. What does that tell us? Their ES is stronger than the NQ. So immediately from there, we should be looking up. Including that volume imbalance. target that high right there. We don't really trade the 5 a.m. Still looking higher. Okay, 7 to 8. Our trade would be lower here. So we see there's weakness. We just barely take out that low from the previous macro and we revert back to this new day opening gap where the PD array is created from within that macro. Right there from the midpoint 38.75 down to 30 even. Wouldn't want to trade particularly in this, but I would have wanted to see it drop down into this and just tap into the new day opening gap before the open or right at the open before pushing higher. Moving on, we take out that regular trading hours high, and we have another one right above us, so why not take that out? Suspension, volume and bounce above and below, immediate entry out by the 15-minute, 91 to 99, new week opening gap, break lower, take out the sell side, and we start moving off of the inversion level right here post macro. Back into that new week opening gap. Would have allowed for this, but you could see that we're chasing a premium here because the bodies don't even enter or close within that. Come up, tap the new week opening gap, and die out. Consolidate. Induce fear in the accumulation lower. And run back into that new week opening gap. Rebalance. Not quite hitting the low. But you can see why we would die out post macro. We have these areas all around us. We would be looking for that next high since we are so close in range. It's the lunch hour. Take it out in 1 p.m. macro. Immediately following, we're grinding lower. Not much going on here. We would hope to not take a trade within that. But the rest of the day looks somewhat self-explanatory. We're trying to beat back higher, but we still have plenty going on. Plenty of sell side. Data high, data low, come back to a premium, break lower, retest into that 131st presentation, back to the low. Right now we opened up, gap up. We have these somewhat relative equal highs here. So that's what we could be looking for. And we have yesterday's or today's session highs and lows. I'm going to go ahead and remove this. So for tomorrow or tonight, we're obviously going to look for this high in range. And this week opening gap again. So I want to draw on that. Lock those in place. I definitely want to see just this tapped into, because that's, I feel like where a lot of stops will be. Right there, I'd like to get a gauge by looking at a line chart. You can see why stops might be up there. So I will check back in tomorrow. We'll do another review. Hopefully at that point we can do some back testing as well. But that is all for now.